Good evening, esteemed participants, to this one more webcast today on review of automated controls and data analytics for internal audit. This is the topic of our webcast today. On your screens, you can see CA Dipen Shah ji, CA Rikshit Jain ji, very, very esteemed faculties who are going to handle this session today. And our very dynamic mentor, I should say, of this committee, CA Charanjot Singh Nandaji, the Honorable Central Council member from the Northern region, who is looked upon as a person who lends wise wisdom to the council. We have CA Gyati Gupta ji, who is going to be the moderator of this session. Our secretary, our strength behind the committee, CA Aarti Bansal. We have Arun Agarwal, who is also from the board, and Nisarg, who is giving the technical support for this webinar today. Esteemed friends, the internal audit sector is a sunrise sector for chartered accountants. And we in the Board of Internal Audit and Management Accounting are leaving no stone unturned to equip our members, to arm our members with various skill sets required for conducting internal audit successfully and purposefully. CA Dipen Shah and CA Rikshit Jain bring vast experience with them of industry, both of them being with Pidilite Industries, which is, I think, famous for Fevicol and Feviquick, if I'm not wrong. So they are going to lead us today, and we are going to stick on to them till the end. Esteemed friends, I welcome each and every one of you who are here today with us and who have been joining us Wednesday after Wednesday to these sessions and motivating us to do more for the profession. I welcome our honorable mentor Nandaji, Dipen Shahji and Rikshit Jainji, our speakers, Gyati Gupta ji, and each and every one of you to this webcast, and request Nandaji to give his brief opening remarks before I hand over the session to Gyati Gupta. Welcome, Nandaji. We are all eager to hear you.
Thanks a lot, my Honorable Chairman, C. Rajendra Kumar, most commonly known as the GST man. The GST reforms in the country have a great linkage with our Honorable Chairman, a man who has instituted so many reforms, and more importantly, the synchronization of the institute activities with GST department holding programs all across the directorates. The two speakers of the day, my very dear friend, CA Dipen Shahji, who's from Mumbai Pidilite, CA Rikshit Jainji again, who's from Pidilite, CA Gyati Gupta, the moderator, again a very enterprising young chartered accountant from Meerut, CA Aarti Bansal, the secretary to the board, Nisarg, Arun, and all who have come here to go home more enlightened. Ladies and gentlemen, my Honorable Chairman very rightly said that internal audit essentially is a sunrise area. And they say, when the sun is at its top shine, with the rays it brings hopes. And as so, the internal audit, now with the chained avatar, brings in automated controls, brings in data analytics as a subject. Analysis becomes important. Earlier, there was gold, then came oil, but today everything is data. But how to use that raw data is very important. Data by way of analysis, data by way of systematic controls and deriving the gold out of it. You all are well aware that the internal auditor is answerable to the board or to the audit committee, as the case may be. So you take inferences of data, you analyze that data and bring out the points on which decisions are taken by the respective officers of the company. I would like to put across, internal audit is a huge subject, and sometimes people feel that they understand the internal audit fully. It is not so. Internal audit changes day by day. And if internal audit was a person, it would have said, क्या यूं ही चंद लम्हों में पढ़ लोगे मुझे तुम? क्या यूं ही चंद लम्हों में पढ़ लोगे मुझे तुम? मैंने खुद को लिखने में बरसों लगाए. My dear friends, internal audit is for people who indulge who understand, assimilate, and bring out the best, who are very keen to add value to the management perspectives, and more importantly, who are there to bring out the fallacies in internal controls. The, all of us are aware of the facet that where internal controls become weak is essentially the breeding ground for frauds. So the entire system has to be closely monitored, and if it is automated, it will always give you a lot of credence, because the areas where you can't go on a daily basis, the automatic controls will ensure that control environment moves at the highest level. Ladies and gentlemen, I would like to put across as a concluding note that this session is going to be a very exciting session. And we, under the dynamic chairmanship of Sri Rajendra Kumar, have done such many programs. And I can always tell you that in case you want a specific program to be done, kindly write to the Honorable Chairman or to me, and we'll ensure that we have the best of the speakers, the leaders of the industry, to come and interact with you. So I won't stand between Dipen sir and Rikshiji, and would just like to conclude and say a last message. That message is that difficult roads lead to beautiful destinations. My dear friends, if you get involved in understanding things, if you got involved in continuing profession education, either as a practitioner or as a job seeker, you will always touch unprecedented heights. Thank you. Thank you so much. Over to Madam Gyati Gupta for further proceedings. But before that, my Honorable Chairman would give his closing remarks. Mr. Chairman, the dice is all yours now.
Thank you, Nandaji, for beginning it as usual in your own style. May I now request CA Gyati Gupta, who is our very young moderator today before us. In fact, friends, you would always be seeing that our moderators are very young chartered accountants. Now, that is the style, that is the duty of this particular committee board, to ensure that young chartered accountants are given a platform so that they also rise up to the level of budding speakers in the future to come. That way, CA Gyati Gupta ji, welcome to you. We now leave this floor for you to interact. Thank you very much.
Thank you, respected and honorable Rajendra sir and Nanda sir, for enlightening us with your words of wisdom. Your words fill us with motivation and guidance. Good evening, everyone. I am honored to moderate this session today, which is being organized by the Board of Internal Audit and Management Accounting. And taking the course of this session further, let me introduce our first speaker, C. Dipen Shaji, who is currently working as a Chief Internal Auditor with Pidilite Industries Limited. He has over 21 years of experience with diverse industry sectors, including infrastructure, power, FMCG, and chemical sector and consulting firms. His area of expertise includes various aspects of governance, risk, and controls, covering internal audits, internal controls, review of IT general controls, application controls, and SAP configuration controls, GRC implementation, enterprise risk management, and fraud investigations. C. Dipen sir, you are wholeheartedly welcomed. Over to you, sir.
Thanks a lot, Gyati, for those kind words. And thanks a lot, Mr. Rajendra and Charanjot ji, for setting the context of this entire session. It will probably help us to build on that. I'll just share my screen. Let me know once it's visible.
Yes, sir, visible, sir, visible.
Yeah. So as Nandaji said, data is a new oil, or it's kind of a gold. And I'm sure all of you would know that mining gold or mining or exploring oil is not that easy. And that's very much true even for data analytics, or when you are doing an automated controls review. So where to focus, how to focus, and how to achieve the objectives of audit. That's an idea what we want to drive today. Our discussion will be more on a conceptual opening up and direction as an auditor, what we can look into, showing a path which we can travel to achieve those objectives. And then obviously it will be left to the individual auditors, depending on the environment, what they need to deep dive into, what they need to focus, and how to go about the reviewing the controls and underlying data analytics. Right. So what we'll be covering is, as I said, the controls is the one of the first part what we are going to cover. So we'll give you an overview on what is control, what is automated controls, what are the key controls generally are there for, say, some of the key process like O2C, that is order to cash, procure to pay, financial reporting, and fixed assets. Post that, my colleague Rikshit will take you through the process of data analytics, what is data analytics, objectives and benefit of analytics, what are the key challenges and learnings in implementing, and some of the broad areas where we can do an analytics, right? Okay, first and foremost, the definition of controls, right? There are various definitions, but I thought this one is more relevant and it's precisely sums up the entire control gamut. It controls are the ones which mechanism, policy and procedure are implemented by the company. So essentially it covers the entire process what a company wants to implement, and the process, when it is broken down into various activities, becomes a control which ultimately drives those policies and procedures, right? It ensures that frauds are prevented, the financial and accounting informations are true and fair, and also promotes the accountability by giving a responsibility to execute a particular control to a particular user, right? Going further down into the controls, what is application controls? So I would like to just quote the Institute of Internal Auditors definition of the controls, that automated controls or application control is controls that pertain to individual business process or application systems, including data, separation of business functions, balancing of processing totals, transaction logging, etc., etc. Right? We'll further deep dive into these things and explain you what exactly we mean by those things. Right? The objectives for application controls are to have an input data which is accurate, complete, authorized, and correct, right? Which links to my financial statement assertions ultimately. Data is processed as intended and in an acceptable time period, right? Because there will be a task which will be dependent on the data which is being processed, right? So the objective of those control is to ensure that the processing happens in accurate and correct manner. Output are accurate and complete. What is desired output we are getting. So all these things are ensured when your right set of application controls are designed. Maybe if required, there could be some manual controls or supervision controls, which is IT dependent controls. We'll explain those things as well. Data stored and is accurate and complete, right? This is also a critical ask, because once you have data which is already processed, if there is any loop controls on that, it may compromise the entire financial systems. Record is maintained to track the process of data. Now, this particular objective has become really critical in light of new provisions by the Companies Act 2, which requires all the companies to have an audit trail to be maintained for all the transactions that are being relevant for the financial statements. Right. Okay. Now, this is a kind of a controls overview. So typically there are two broad buckets for controls: manual controls and automated controls. Manual controls are such which are primarily driven by the human intervention, where human has to either input, review, monitor, approve. These are all typically manual controls, right? And it is a highly dependent on person. So a manual control being exercised in an individual, may involve certain amount of decision making, certain amount of objectiveness from the, or subjectiveness rather, from the person who is processing those controls, right? And that's where the reliance on any manual control is limited, right? Then there is another set of controls which are automated controls. Now, automated controls are generally bifurcated into two parts. One is IT dependent manual controls and one is application controls. First, IT dependent manual controls are controls where the primary document or activity is driven by the system. For example, aging analysis or inventory aging report or data aging report, right? You will probably get the output from the system. But how do you analyze that? Where do you focus on overdue data or age inventories? Those are typically driven by the person who is reviewing it. And that's why those are treated as an IT dependent manual control, where there is some dependency on the systems, either for report or doing some activity. And then there is a final review or activity done by the human intervention. The next is the application control. Now that's the objective of this session, like, what is application controls and how do we cover this? So as I explained earlier, the application controls are the ones which are driven by the system to achieve the objectives of the organization in execution of a particular process by ensuring that the policy, process, or mechanism of those controls are done in a precise manner, in a repetitive manner, with zero human intervention. Now that's very critical. What I reference in manual control is there is some sort of manual dependency, manual subjectivity, or human intervention is involved. In application controls, once it is designed in the system, okay, it will work in the same manner. It's kind of a machine is doing some task, and as we know, like machine error rate is very limited, very minimal, right? That's the reason organizations, when they grow, they focus on more and more application controls or automated controls, and reduce the dependency on the manual controls. Now, application controls can be of two types: embedded application controls and configurable controls. Now, when I say embedded controls, these are hard coded in the system or the program or the ERP or the accounting software, whatever the company is using. Obviously, as an auditor, our ask is not to get into those embedded controls, because it is more like an program, right? For say tried and tested software, for example, SAP or Oracle ERP and all, those embedded controls are tried and tested over a period of time. So you can rely on those controls. So just to give an example of embedded control is the totals. Typically if you are taking any report, a standard report from any ERP or any software, you can rely on those things, right? The total will be accurate. Or any ERP generally gives an assurance whatever you are posting, it will have a debit and credit impact as well, right? Unlike manual entries where you have to ensure that each debit has a credit or vice versa. So embedded controls ensures that certain basic things are taken care of by the system as a default. You can call it as an inherent controls as well. The next part is configurable controls. These are the ones where as an auditor we must focus. Reason being, these controls are decided by the company, by the process owner, depending on their requirement. So most of the systems give a flexibility to a user company to decide or tweak a particular process in the desired manner, right? And they can set those parameters in the system, and which will ensure that the control works in the defined and desired manner, right? So that's where the configurable controls, being changeable or which can be changed frequently based on the requirement, becomes a critical part of this entire process review of automated controls, right? To rely on all these controls, technology general controls, or ITGCs or GITCs as people call it, becomes very relevant. While that's not the topic over here, but yes, the first step would be to check the IT general controls. Now, what I'll touch briefly on what is ITGCs in the next slide, but this is kind of an overall gamut of what is the control, how is it placed in the system, is what I wanted to convey. Right. This is a kind of a control landscape, how each control or each stacks up, and what as an auditor we are expected to do, right? Let's start from the process or audit area. Typically, as an auditor, we talk about audit area is O2C or P2P, or maybe a sub process within that if the area is really large, right? Each of those area will have a defined business process or classes of transactions or sub processes. Like if I just explain for the procure to pay, the first part is the procurement, which will include the RFQ, negotiations, comparatives, and final release of the PO. The next step would be, or the sub process will be on the goods receipt, which will have additional controls like quality checks, payment, etc., etc. And the final would be the payment processing or invoice processing, based on which my payments will be released. So these are kind of a sub processes. Now, there could be a single application which addresses all this requirement, or if the organization is a complex or a large, they may have peripheral applications to say do the procurement part, or to do an invoice management, like the moment the invoice comes from the vendor, before it reaches to the accounts, how the document flows. You may have a peripheral systems, but all those applications or systems becomes relevant when we are looking at a control landscape. And it is very critical for auditor to understand which are these applications, how which critical parameters or the relevant parameters are being processed by each of these applications, and accordingly decide our audit procedures, right? If you see on the left hand side, I'm highlighting, if we are relying on we need to rely on certain applications. We also need to test certain IT general controls, which is program change management. That is how a particular control is changed. Now, when we are talking about program change management, typically it is towards configurable controls. Embedded controls are very rare to be changed. In case something which is embedded needs to be changed, the software vendor will ask you to develop a customized program. So, what I mean by program changes, typically any change in the configuration, or if you are implementing altogether a new system, then it's a program change. You need to test the process of that. Access and security controls, which is typically who will process a transaction, who will review, or who will do a maker checker, etc. How this person will access the system, who should access, from where, within the company's network, from outside, etc. All those things are controlled through access and security control related processes. Computer operations is relevant where there are multiple systems are being used, and data flows between those systems. So it becomes very relevant to have controls over those computer operations, which is typically a batch processing or data download upload within the systems, and a program development, which is ideally for the new system which is developed. So those are the IT general controls which we should keep it in mind. Just one word, comment on this. IT general control is a kind of a one-time activity. You don't need to do it every time you are doing any automated controls review. If you are doing it, maybe once in a year, it should cover all the processes, all the applications. That's how you should approach the IT general controls. And when we are testing the application controls, the objective, what I explained earlier in the financial statement assertions, which is accuracy, completeness, validity, and restricted access or segregation of duty. So all application controls should address these objectives so as to have a reliable controls and financial statements or the process data, right? And below the applications, there is an IT infrastructure, which includes my database, operating systems, or network systems, etc., etc. Yeah, I'll move to the next slide. Further deep diving into an automated control. Now, I explained what is this automated controls, how the controls are stacked in the overall processes, and what we should do as a pre-work, which is typically ITGCs. And then how do we test now automated controls? Now, there are no specific thumb rule like, okay, I will do the testing like this only. There are various means and ways which are available for testing an automated control, right? I've just listed down a few of the test procedures. So first and foremost, or the most common practice is to inspect the system configurations. As I said earlier, there are configurable parameters. There are defined audit programs which are available to test a particular system configuration. You should check whether the particular configuration, the way it has been defined, is it in line with the defined process, or can there be some deviation to the defined process? There are high probability, if the IT general controls are not adequate, that the process, the way it is defined as an SOP or the policy or manual, may not get configured exactly the same manner in the systems. That's where the system configuration review becomes very critical. Other step is when it is not a configurable control, but it's kind of hard coded as a program or a customized program. Then the best way is to do a reperformance of the control activity. So process a transaction in a test environment as if a transaction is getting processed in the live systems. That will give a good comfort to the auditor that the process is working in the way it is designed or the way it is expected, right? Inspection of user acceptance testing is just to get a comfort if any key development has happened during the period under review, then you can go through the process which was followed for user acceptance testing, which is a kind of a final go ahead to implement the system. Inspection of reperformance or output reconciliation with supporting details. Now, this is very relevant where data is flowing between multiple systems, from peripheral system to the primary system or vice versa. Then reperformance or output or reconciliation is one of the best method to reconcile that, okay, a peripheral system, say for example for procurement, a negotiation, etc., has say 100 transactions and X number of rates, etc., and the same is getting uploaded in the core system in the same exactly the same manner. So that will help us to get a comfort on that the primary system data. Reperform I already talked about, but using a system data or maybe using a uh, masters, etc., everything right from the end-to-end processing, inspection of user access or segregation utility. Again, this itself is an audit area, not specifically focused on application controls, but since it revolves around deep diving within the system or looking beyond the front end, I've listed it here. It's very critical again to understand if a particular person is executing a transaction in his entirety, then it becomes obviously a fraud risk and a big vulnerability, and that's where this should be reviewed, right? And the effectiveness of a just a again word of caution, the effectiveness of these controls depends on the ITGC effectiveness, which I explained earlier. So if I have a good controls over program change management, I have good controls over access management, physical security, and system security controls, then I can definitely rely on all these automated controls. Yeah. Now deep diving into a process, what kind of an automated controls we need to look at it. So, I've listed some controls, but before I deep dive into this, probably I would like to share some, experience on this. Before you zero down on any automated control, my suggestion would be obviously you have a process walkthrough, process understanding from the users, and based on that, do an end-to-end system walkthrough also of a particular transaction. When I say end-to-end system walkthrough means uh, starting a transaction in the system, the way a particular transaction will start in the system. So, for example, for a procure to pay process, my system entry starts with the RFQ or the purchase requisition. Then, as an auditor, we must create a purchase requisition in a test environment, take an help of the users, request how the RFQ will get floated, maybe to a dummy vendors, etc. See how the quotes will be received, check the controls over there, how those data will get transferred to say purchase order, how it will get approved, do some kind of a negative testing as well to see that okay, system is working the way it is expected, because there will be some lot of permutation combination and some of those controls or the configurations may not work in a specific scenario. So it's very important to understand the client system environment and do a transaction walkthrough. Again, another word of caution, do it in a test environment. Right? You should not do any dummy transaction processing in the production system of the client. Right? Now, coming to some key configurations or key parameter-based controls. The first and foremost in procure to pay is the three-way match indicators are properly defined in the purchase orders. So these are again coming from the configurations. So you need to check those configurations, whether those parameters are defined, which makes sure that purchase orders are linked to say PR, GRN is linked to purchase order, invoice is based on the purchase order and GRN. Hence, my three-way match is assured, right? Purchase order may have a system-based approval, which will be still an automated control or slightly a human intervention, because a person will be approving in the system, so the trail will be there in the system. But whether he should have approved that or not will depend on the supporting documents, etc. So it will have a two-part to review this particular control, right? Goods receipt cannot be processed in excess of a purchase order quantity. There may be some exceptions, especially saying if the nature of the material is a bulk material or liquid material, etc. Right? Vendor invoice cannot be processed in excess of the goods receipt, including if any tolerance which I have defined, say compared to the PO quantity or minimum order level quantity or minimum dispatch quantity, etc. Right? Prices in vendor invoice should not be changeable. When I say vendor invoice, I mean once you enter the invoice, when you receive the vendor invoice, it should be ideally linked to the purchase order, and there should not be any need to capture it when you enter the date of vendor invoice, right? The account determination is very critical again, to which account the goods inventory gets posted, to which account the vendor are posted, those should be checked. Duplicate invoice related controls, it's a typical issue in any system, and system has typically all ERP has a very limited inbuilt checks to do a duplicate invoice check, right? Payment to alternate pays, many systems do provide to pay to a payee, which is not the same as the original payee which was listed in the original PO. So these kind of options are allowed in a system. You need to check those configurations. You need to understand what is allowed, what is not allowed, how these controllers are designed, and accordingly plan your audit procedures and data analytics, which will take up separate. Controls over vendor master, a lot of things comes from the vendor master, including the GR based invoicing or three-way match or the currency part or the credit terms, etc., or the freight terms are controlled through vendor master. So it's very important to review that as well. And all vendor masters entries have a assigned reconciliation because that also has an impact on the accounting part of it. Deep diving further in the controls, three-way match, three-way mismatch. Test the configuration control in the system if system allows booking of additional amount, additional quantity at the time of invoice, or changing the or booking the excess value when I'm booking the invoice, right? If you are able to identify that there are some gaps where the system does allow it, and typically there will be scenarios where companies do keep a window open to book excess amount or deviate from the original or the source document, which is say PO or GRN for rate and quantity. Right. So when you do a transaction testing or a transaction walkthrough or a system configurations review, if you identify a gap, obviously it will require data analytics, which will again explain how the data analytics should work. Delivery tolerance review, again, it's a configuration based control. You need to understand the scenarios, which material there is unlimited delivery means. Even if the PO is for say 100 units, I can receive X n number of quantity because there is an unlimited delivery which has been allowed, or over delivery which can be restricted to 5%, 10% depending on the company practices. So we need to identify these materials, have a focused review of those materials or procurement of those materials, review the material receipt data, review the invoice data, which will essentially involve some analytics to be run to get an overall assurance on the validity of the data and the effectiveness and adequacy of the controls. Alternate pay, again, a very, very risky proposition. It should be highly restricted because otherwise, if I'm allowing an alternate pay, the material is getting procured from vendor X, I may end up in paying to vendor Y or maybe to different bank account, and hence may lose some money. Excess payment compared to invoice value, which is again triggered from the three-way mismatch. If my system allows to book an excess invoice, I may end up in making excess payment as well. At the same time, when I'm doing the payment run or preparing a system-driven checks, if somebody is allowed to change the amount, it can also lead to excess payment. So all these controls we need to check and then decide on the analytics procedures. GR-based invoice indicators. This is again a master data driven. If you analyze the entire master data, you will be able to zero down on where I need to run a GR-based invoice or where I need to do a deep dive or do a sample testing of the transactions, especially if there is no GR-based invoice indicator which has been activated for a particular vendor or for a particular order, right? Configure default setting for price control in material master. This is again relevant when I'm booking my or for inventory valuation. Disallow material posting to prior period, which will probably, if any material posting is allowed to earlier financial year or a previous month as well. Many companies do a material accounting closing on monthly basis. So they don't allow any posting even in a previous month, even if the financial year is open. So these are kind of an indicator of control deviations or bypass. We need to do a transaction testing, test the controls. If there are any exceptions in the configuration or controls are noted, then we need to perform data analytics to get an overall assurance on the entire process. Now, deep diving into our order to cash process. Again, the key part in order to cash is the pricing, the price at which I'm going to bill to the consumers, right? The pricing procedures is dependent on many parameters, location of the customer, delivery point, the combination of the product types, etc., the freight conditions, whether it's company is bearing the freight cost or whether the customer is going to bear the freight cost. So typically these things are controlled in a customer master. We need to understand what are the controls company has defined as an standard process or as a configurable controls, and accordingly design our processes. Pricing, that is the prices or unit prices, how it is picked up in the sales order. Is it whether the company has a price list driven orders or is it a customer specific pricing? Both will have a different controls. If it's a price list driven pricing, then obviously it will be picked up from the master and probably there will not be any leeway for anybody to change the price in the sales orders. It will be controlled as a master data. But if the pricing are customer specific, then it may be a scenario where each sales order may have a different pricing. Then again, the analytics becomes very critical in those kind of scenario. Credit limit check. Again, these are maybe based on the customer, region, even the product. So we need to understand those processes, how the credit limit checks are defined, whether it's is a kind of just a warning controls, or is it enforced that okay, if the credit limit is exceeded, no orders will be processed. All those things needs to be checked, and again then based on that you can decide what kind of analytics we need to perform, right? Delivery requires a preceding sales order, which is say I can create a delivery in the system only if there is a sales order reference. Something like a purchase order or a GRN needs to have a reference to the purchase order. The controls over delivery is I should not allow any excess delivery or material dispatch compared to the sales order quantity. Sales invoice cannot be processed in excess of deliveries. So all these are configurable controls. Sometimes it may be hard coded. The best way is to understand how the system has been defined, how the system has been designed for these things. Again, either do a configurations review with the help of the IT experts or do a transaction testing in a test environment. Appropriate revenue recognition, of course, if the sales accounts or the revenue accounts are not mapped properly, you may end up accounting the sales part in some different account, and you may misreporting the revenues. Related to that is the GL determination, which account to be posted. Again, while we may say it's an integrated SAP, but there will be a lot of scenarios where you may have created and dispatch, but the entry may not get posted in the material master, or if you have created invoice, but due to some system issues, it may not get posted to the customer ledger. So you can understand what challenges it can pose or how it can compromise the quality of data. So it's very important to understand this aspect in a particular process. Price in the invoice level also should not be changeable. There are many, there could be scenarios where people may get allowed to change the price at the invoice level. Even though it is freezed at the sales order level, if a scenario comes where the prices are changed at the invoice level, then it defeats the control at the master level. So again, then your audit procedure may have to be changed. Rebate processing, whether it is on the invoice, quantity, value based, again, it requires a kind of a re-performance to check that the system is calculating the data or the benefit correctly. The parameters which is defined in the system is in line with the policy which has been defined, because typically the rebates etc. are governed based on the management policy or the business strategy which somebody has to configure in the system. So if there is any mismatch, obviously it will lead to probably it may lead to a revenue loss. So it's very important to understand how the rebate process works, manually policy works, and then how is it has been mapped in the system. All customer masters needs to be assigned a GL account, essentially to ensure that the sales invoice are posted to a customer ledger as well, right? Explaining further on the pricing condition, uh, as I said earlier, like, if the system allows free dispatches, sample goods in the sales order, identify which are those products. These are some of the vulnerabilities which I'm highlighting, right? Identify which orders or product category is allowed under such free issues. Is there any SKUs which are restricted for free issues? It should not happen that I have a small pack and a bulk pack. Ideally, small pack only should be allowed as a free samples. But if the system controls are not defined, I'm able to, if somebody is able to dispatch bulk products also as a free samples or free quantity, it may lead to a significant loss to the company, right? If the pricing is per price list can be overruled or not enforced, then again there is a loss to the company. So this pricing conditions, system configuration needs to be checked thoroughly. Trade limit check is also very critical. It can lead to delinquencies in the receivables if the credit limits are not controlled. Also, if there are manual overrides allowed for any credit limit, right? Then who can allow those manual overrides? Is there any system trail available? What are the frequencies at which it can be allowed? Are there any justifications? Are there any maker checker? All those controls should be checked, because again, this is a highly vulnerable even to a fraud, because if I have a particular customer to whom I want to favor, I can keep on exceeding the credit limit by manual approval or system override. So it becomes very critical to understand how the system override will work in this scenario. And based on that, again, you need to decide what kind of analytics you need to run, what kind of field you need to pick up from the sales details or sales registers or the relevant system tables, etc. Quantity delivery, typically organizations may not allow any excess delivery, but sorry, if it is allowed, then obviously we need to deep dive into all those transactions, right? Coming to the next process, which is fixed assets and financial reporting, right? Accounting period open and close process, very critical, especially in light of the new provisions on the audit trail, which says that there has to be a complete trail on any changes in the accounting document or an accounting period, etc. Right? So my entire accounting document in a typical ERP system is controlled through accounting period open and close process. Right? Manual costing block in control reconciliation account. What do we mean here is we discussed about some reconciliation account where the posting is done automatically by the system. For example, when I do a goods receipt or when I do a dispatch for sales order, so entries gets posted automatically in those accounts, and typically those accounts should not allow any manual posting. So this is again a very critical control, because if manual postings are allowed in these accounts, it can override the entire process. So it's very important for an auditor to check these things, and based on that decide internal audit procedures. Payment block, payment method for an individual customer, right? Typically, most of the clients are moving towards online payment. So if any vendor is marked for say manual payment or check payment, I think that needs to be evaluated and reviewed. Review of park post documents. It's more of from the hygiene perspective, especially when we are talking from the internal audit perspective. Controls over journal entries, especially the debit note, credit note, because any deviations, whether it's a procurement process or sales process, all those deviations are controlled through debit note, credit note, or journal entry. So the focus for an auditor should be on journal entry specific to those areas or debit note, credit notes, because there will be n number of journal entries for coming from different areas, maybe provisions or some financial adjustments, etc. So the internal audit focus should be on the process which they are auditing. For fixed assets, I think the most important part is the configuration of the depreciation area, because that will determine what is the rate of depreciation that will be applied on a particular asset or a class of asset. So if it is not kind of an enforced at the time of master data creation of an asset, you may end up applying a different depreciation within the same class of asset. For example, if the depreciation rate or depreciation keys are not enforced, You may have a situation where one item in plant and machinery have a X amount of depreciation and another item has a Y amount of depreciation. So that's where you need to review these areas. As I said, reconciliation GL account or the control GL account needs to be reviewed even for fixed assets, and asset class and depreciation key combination. Which asset class will have which kind of depreciation key to get an overall perspective. Right. So as I just explained, analyze depreciation rates assigned to an asset by comparing asset class, useful life, asset group, etc. Analyze the park and post entries. Lastly, again, would say more on hygiene perspectives. Are there any old entries which are pending since long for posting, etc. Right? Review of backdated posting documents. If there are frequent period open close activities for the past period, then this becomes a very pertinent point to deep dive into it. Mainly, while of course it has an impact on the financial statement, cutoff, etc., but from the internal perspective, it highlights certain process gaps or maybe even the process bypass or override of the process. So it becomes very critical for even for internal audit to look into those kind of transactions. Manual posting in accounts, mark for auto post or reconciliation account. As I said, these are control account. There should not be any manual entries. If there are manually entries in any of the revenue, material or inventory account or customer ledger will be still allowed, but the customer control account, if there are any manual entries, it again should draw attention of interrogator. They need to focus on that. It can lead to multiple things. As I said, bypass of control, override of control, or even maybe a indicator to fraud. Right. That sums up my part of the presentation, which was focusing on the automated controls. How does it lead to help in internal audit, or how can we use the review of automated controls approach to optimize the audit effort? During my discussion, I highlighted various points that if there is a deviation in the controls, how do we address those, or how do we review those areas and be in a position to give an overall assurance to the management, right? That's where the analytics come into the picture. I'll hand it over to my colleague Rikshit Jain, who will take us through the what analytics is all about, how analytics can help us into internal audit to cover probably say 100% of the data or 100% of the population and help us in giving a good assurance to the management. Thank you all for listening. I invite, before Rikshit, probably I invite Jackie to introduce him and then.
Thank you, Dipen sir, for guiding us about the manual controls, key automated controls, specifically in P2P sector, OTC, and automated control review gaps in pricing, quantity, delivery, etc. The coverage has been comprehensive by you, and we are very much sure that this might have benefited our audience as well. Thank you once again. And proceeding with the next leg of the session, where we'll have the opportunity to be enlightened by our next speaker, C. Rikshit Jainji, who is currently working as a senior manager in analytics and investigations with Pidilite Industries Limited. And he has over 9 years of experience with diverse industry sectors, including chemical sector, consumer goods, pharmaceutical, hospitality, and consulting firms. He is skilled in integrating data analysis technology into the audit solution, performing internal audits, fraud investigations, enterprise risk management, internal controls review, and IT general controls review. So, C. Rikshit ji, you are wholeheartedly welcome, and the platform is all yours now. Sir, you are on mute. Rikshit sir, you are on mute. What is the Rikshit sir, please unmute yourself.
Yeah. Hi, Gabby. Thank you for the intro. We'll cover the topic data analytics for internal audit. I'll just briefly mention that what would be the agenda of discussion. One is we'll discuss the definition of analytics, the stages, the maturity of data analytics, the key objectives and benefits of using analytics in internal audit. How do we incorporate internal audit into analytics and internal audit? How we can synergize it. We also have a curated list of analytical scenario which we have prepared, which can be used as a use case for developing analytics and managing. There will be some global tools that will be referring, which are being used globally by for analytics and visualization. So what is analytics? So it's a process of inspecting, cleansing, transforming, and modeling data with the goal of discovering useful information, suggesting conclusions, and supporting decision making. So in analytics, it's very important that how you convert the data into information and information into insight. And those insights can be used for decision making. Also, there's a third quote which says that doesn't matter how much data you have, it's whether you use it successfully that counts. Basically, giving an example of data, info, and insight, we'll have a purchase data, okay, which have all the product prices. That will be a standalone data set, which we have to convert into an information, wherein once we analyze the data for product-wise price analysis, we'll understand that the same product has been used, maybe procured at multiple prices. And that is how insights can be, delivered. And appropriately it's been used for the decision making. So this is how a journey for how we can convert the data into information and information into insight. These are the stages of analytics, where we start with descriptive, we go on with diagnostic, then predictive, and then prescriptive. In descriptive, we do a trend analysis or a deep dive into our past trend. Let's say if we have 3 years of data, so it will, by analyzing that data, it will tell you what have happened, what have gone wrong. The second stage is diagnostic, where it's a root cause analysis, RCA, where it will allow you to analyze that why it have gone wrong, what have happened, what have what are the areas of improvement. Third stage is what will happen. It's a predictive analytics, wherein basis descriptive and diagnostic, you'll understand that what is the key parameters you have to monitor, some key risk or key vulnerabilities which you have to mitigate, and how we can proactively review those risk and controls to ensure that there is we in time we have those damage controls. And there is prescriptive analysis, wherein how we can make that happen through data modeling, data structuring, and other things. So this is a brief description of how the stages of analytics go ahead. Through analytics, we can achieve 3 major objectives. One is continuous control monitoring, fraud prevention, and concurrent auditing. What are the key benefits? We have improved audit quality and efficiency during our audit executions. We have faced a lot of issues in handling large amount of data, where we have basically an Excel limitation, which we can say, okay, it cannot go beyond 10 lakhs. However, this analytics will help auditors to analyze large volumes of data. Third is proactive and real-time review, which is very important. Audit have always been a post facto analysis, okay? However, analytics is helping you to move towards a new age of technology, using it through, wherein we identify and understand and take corrective actions proactively and on real-time basis. And that have been a directive by management also. How we can use it, analytics, for understanding and identifying the insights and the opportunities. Because through analytics, we identify actionable insights. We have enhanced the ability to identify risk, detect frauds on a real-time basis, and improve decision-making. There are process improvements and cost-saving opportunities. These are some key benefits of analytics. This is a very important slide in terms of how a life cycle of analytics will flow into our audit methodology. There are 5 brief areas where first we develop the analytics plan, we acquire data, we analyze the data, we review, and then report. The first step of developing the analytics plan is very important in terms of what we want to perform analysis for. For identifying those key scenarios for developing analytics, the auditor first have to understand the audit objectives of the area which we are doing audit of. We have to understand the control framework of the company. We'll have to refer the prior audit reports of the company to identify the issues and the deficiencies and the control lapses and process improvements where we feel that analytics can create an impact. There is a brainstorming planning activity which is expected within the audit team, where the wisdom of an auditor will help the analytics team to understand what are the key risk areas or key vulnerable areas, which will identify those control data points where the development can be initiated. So basically, those 4 broad steps will help you to create a universe for analytics. Let's say a procure to pay process will have some briefly 30-35 data points where we have usually identified control lapses. Correct. So even Deepan mentioned that how the automated lapse in those automated controls can be identified through analytics. Because given example, there will be a control which is operating efficiently when it comes to a SAP configuration control. However, when we do analytics, we identify that there are a lot of users who somehow circumvent those controls, adding some multiple parameters which we can discuss in next slides. So these 4 broad steps will help you to create the universe of the analytics, which can be then taken up for development. This is a very key process. Then we identify what are so as we discussed, there will be first identification of the key analytical test which we want to perform, which can be mapped to the audit program. A very important step, meeting with the local IT team to understand the IT landscape. Now, analytics for internal audit will have 2 major substreams. One is the functional knowledge of IA, and second would be the IT. Okay, merging these 2 categories will help you to deliver effective analytical results. And therefore, understanding the entire IT framework, IT landscape of the company is pivotal for that company. Last is developing analytics specifications and create analytical requirement document. Basically, documenting all the scenarios which you potentially feel are of high risk vulnerability, which needs to be reviewed during your audit procedures. Second is acquiring data. So whenever a scenario has been created, first is you'll have to test the scenario, do a pilot first of all. This is very practical. Okay, to first understand, okay, I'll have to take a sample data set to validate if that scenario which I have created, okay, holds true in terms of developing analytics. You may have 50 scenarios on your top of your mind, which you feel that would yield results in terms of analytics. However, maybe 10, 20, 30 out of them may be a false positive, which may be reviewed manually also. And therefore, first you have to get the data, understand the data, through your IT team, mapping of data elements with the source system. Basically, whenever there is a SAP table dump which we take, we have to map each of the columns with the data requirement which we are expecting. In case the relevant data source is not available, we'll have to go back to IT, make some data modeling changes, again get the, we'll have to re-get the data from the IT team. This is a very important step in terms of ensuring the completeness of the data which we are receiving from our IT team. Now, in a practical world, we have been observing that the data sharing happens through either a smart exporter or a data warehouse, basically a data lake. So whenever you want to create an analytical scenario, which is to be on a real-time basis, it will have to be linked to a live data. However, in our IT landscape, none of the IT team will give you an access to your SAP or an ERP data to a production server, because it will impact the efficiency and the performance of the server. And therefore, they will create a data lake for you. So it's a very big task and a very important task to validate if the data which is being transformed from SAP or the ERP to the data lake have no issues with that data, the data sanctity, which is what we have to ensure. So this step is very important. We have to ensure that there is a proper cutoff procedures which have been followed. We have commonly faced these issues in past wherein the data transfer takes 1 day or 2 days of time. Okay. And therefore the cutoff procedures goes for a toss in this case. And therefore we have to ensure that the appropriate logic or the rule sets are being defined to ensure that the cutoff procedure have been applied appropriately. The last and the important step, we have to assess the integrity and the quality of the data. Many times, or maybe you can say a theoretical risk, wherein we see that the data would have been tampered while moving or giving it to the audit team. And this is a normal audit procedure, that whenever we receive data from our auditees, we'll have to do a deep sticks check for the integrity and the quality. So this is the second step. Third important stage is the analyzing. Now this involves developing scripts, analyzing data, defining the logic into the systems through some language. Either it can be SQL, C++, Python. Now this is a technical task which will basically give you, all the rule sets which you may have envisaged that can be, developed through SQL coding or any other coding, and we'll have to create the exception reports. Once the exception reports are created, the second stage will be preliminary review of the results. A very important piece, because there will be a lot of false positives which we get. And therefore, continuous review of those exceptions is key for getting a final version of the output, which can be then shared with the auditee. Third is troubleshooting and refining the logic again and again to feed the logic, basically to update the rule set and get the, you can say a curated list of exceptions which are meeting our objectives. We'll have some identification and resolution of programming errors during the course of development. That is on the analysis. On the review part, basically this is what the output. So whenever we get an output, we perform a review procedure as per our audit standards. And that is how we'll have to ensure that the output is meeting our objectives, the audit objectives. The last step would be, once we have finalized these exceptions and the output, we'll have to share this with our businesses to take their inputs. If the inputs, many times the businesses will help you to, get a final list of exceptions and continuously refine the logic. The last step would be reporting. Now, once we have those exception reports on hand, we'll have to interpret the results, draw conclusions, and prepare our preliminary working papers. We'll have to walk through the business team through the entire report which we have created and the interpretations and the conclusions. We'll have to follow up on the testings which we have performed and what would be the observations. Ideally, the end result for our auditors would be, once the exception reports are identified, concluded, and ready to go live, those reports and the output can be easily used for converting into an observation, where in our traditional way of auditing, we used to take samples and used to manually verify the data. However, in this case, our success ratio would be much high, because we are first testing the entire population. Second, we have a focused exception reporting. And therefore, the exceptions which are being reported can be easily converted into an observation where we can identify control lapses, process improvements, cost saving opportunities. This is a brief cycle which we have to follow for development. Now we have documented some use cases. Now these are real life use cases wherein all our three objectives, which we referred earlier, which is continuous control monitoring, fraud prevention, and concurrent auditing. One is this is the end-to-end process of procure to pay, where we have first negotiation, vendor selection, vendor management, purchase order management, goods receipt, invoice processing, and payment processing. I think we should, well, I'll deep dive on each of one because those are very important. The first one is the bidding by related vendors. In our analysis, we have been observing that while raising the RFQ, there are a lot of vendors who are bidding together. We can identify those vendors through some analytical procedures wherein, let's say if three vendors are bidding together, we'll have to identify through analytics if any matching is possible in terms of phone numbers, email IDs, bank account numbers, address. These key parameters will help you to identify some potential vendors which are related and they are bidding together. Second is time series analysis for quotations. In our previous, we have observed that the vendor bidding at the end, okay, when you do a time series analysis, we have observed that always there is a vendor who will bid at the end of the bidding period, and he'll be allotted the purchase order because he was an L1. Now this is a clear red flag. There is a high possibility that the employee or the procurement team is involved with the vendor, and this is how through analytics we can identify such frauds. Analysis of supplier rates quoted versus the audit place. This is a simple analytics which during the procedure which we follow. Analysis of reorder levels with consumption. No quotations received from vendors but purchase happening for related materials. There is a spike in share of business of a vendor. Again, we have a use case over here is whenever there is a sudden spurt in a share of business of a vendor over a period of time, let's say 3 years, 5 years, it's a clear red flag, and it would require attention or an auditor's attention to deep dive and understand if there's something wrong which is going on with the vendor. Second part is vendor management. Through analytics, we can quickly identify if there are some missing information, some incorrect details, or maybe duplicate vendor codes which are existing. The key would be through bank account, through your GST number, your address, your email ID, contact number. So this would help you to identify some duplicate vendors and again help you to, in the vendor master purging, basically, where our masters can be cleaned on an annual basis. Duplicate vendors again. This is a clear vulnerability which you have observed because duplicate vendor codes are the source for several risks. One of them would be, let's say there's a system control or maybe an automated control wherein a same invoice cannot be booked then more than twice, okay, or maybe more than once in the same vendor code. What if a same invoice is booked in 2 different vendor codes of the same vendor? This will, basically the system control, the automated control which have been configured may not operate in this case because the configuration would have been that the same invoice cannot be booked twice in the same vendor code. However, if there are multiple vendor codes, it will allow you to do that. But through analytics, we can identify such duplicate payments and make corrections and highlight it to the auditees. If there are frequent changes to the bank account numbers, that is what we have to monitor to analytics. The change log of the bank account numbers can be monitored to identify and to identify red flags wherein continuous changes have been happening in, let's say, 5 to 10 vendor codes where the bank account numbers have been changed. This will help you to deep dive and understand if there is something wrong which is going on. there is frequent blocking and unblocking of vendors prior to payment processing. This will again be linked with the same chain management control, wherein if there are blocking, unblocking, which are happening, okay, prior to payment, can be identified through analytics of the change log, wherein if the count of the changes for a vendor, if it is crossing a threshold, let's say 10, 15, 20, you will identify it as a red flag. And then the auditor can deep dive to understand what is going wrong in that vendor code, where there is continuous blocking and unblock. The last one is very important, wherein we do a match of an employee and vendor. Same details, bank, PAN, anything, the data which is available in your systems, we do a quick match of employee and vendor to identify if our employees are potentially our vendor. The purchase order management, there is a split PO analysis, which is very common to be performed. This is to bypass the authority matrix. Any buyer, if he has an authority limit of 5 lakhs and his boss have an authority of limit of 10 lakhs, and if he has a PO to be created for 9 lakhs, there is a possibility that he'll split it into two, let's say 4 lakh and 5 lakh, or 4.5 lakh and 4.5 lakh. This will allow him to approve those PO at his level and not allow those POs to be, to reach out to his boss for approval. So this split PO analysis will help you to identify such anomalies. Same materials being ordered from different vendors, same vendors, but at higher rates. So this is a quick analysis which can help the procurement team to identify the process improvements which they can bring, and basically they can synergize. Okay, this is a win-win situation even for an auditor and the procurement team, where they can analyze that if the same material is being procured at different rates from different vendors, so they can synergize and help the company to save on cost. Again, analyze PO rates versus contract rates, very quick and easy. Again, to be performed as a normal audit procedures. POs raised for non-moving and obsolete material. This is very important to identify the root causes for slow-moving and non-moving inventories. If there is continuous procurement which is happening for these non-moving and slow-moving inventories, it will at the end pile up the inventory and working capital blockage for the company. This would be a big process improvement which can be identified through analytics and shared with the management. The last one is from the forensic point of view, wherein there are cases which we have observed wherein a PO is short closed and a new PO is created at a higher prices. Basically, a PO is created of 100 quantity. 60 quantity has been received. 40 quantity is pending. What buyer will do is buyer will short close that PO, make the quantity, balance quantity as 0, and open up a new PO of 40 quantity at a higher price. This will at the end benefit the vendor. And this is how we can identify if there's any collusion between a vendor and a buyer. Under goods received in service, duplicates goods received in same system and subsequently written off. So this will cover the entire life cycle. When there are issues with the procurement, there are issues with the goods receipt, and ultimately it will lead to inventory write-off. So this can be easily identified through analytics. In second case, it can be a system control and automated control, wherein any raw material which is being procured should be cleared through quality. However, there are cases which have been identified through analytics where within the same category of a raw material, there are cases where the quality team is skipping the quality and allowing the materials to go in onto the production line. At the end, the risk what we perceive is that the goods are rejected and the cycle times continues, because there will be delay, there will be rejections, there will be debit notes which we have to chart to the vendor. So these are some controls which we have to identify through analytics, that if a specific set of RM needs to undergo an QC, then through analytics, we'll have to identify if they are going under, we'll have to get an assurance if they have been appropriately going under a quality check or not. tolerance wherein the GRN is more than the PO quantity. So there is a basic tolerance which is defined into the system. Let's say 5%, 10% beyond a PO quantity is where the GRN can be created. However, through analytics, we'll have to test this automated control if any quantity is going beyond the tolerance limit. Let's say the PO quantity is 100, tolerance level defined as 10, which comes to 110. Any GRN beyond 110 can be identified through analytics. GRN against incorrect POs and delayed delivery analysis. Next is invoice processing and payment processing. So it is very important to identify and prevent the booking of duplicate invoices. And this can be a continuous control monitoring activity, which can be first taken up by the auditors, but slow and steadily, once we have developed these analytics on a real-time basis, this can be handed over to the business for daily monitoring. This will help them to identify such duplicates on a real-time basis and take corrective actions. Rather than auditors highlighting those exceptions to them or observations to them, they can proactively manage those exceptions and take corrective actions. Second is invoice date prior to PO date. During a plant audit, we usually observe through gate records or through review of security registers that there would be material which would be coming without PO. And these cases, in past also we have observed this, that we used to manually take samples wherein from the register we'll say okay, wherever the PO number is not written by the security guy, we'll identify those cases and confirm that these are the procurements or GRN quantity without PO. Okay, and then there would be PO regularization which would happen. However, with the advent of technology, now we see that through analytics, a basic analytics where we see that the invoice date is prior to PO date. In no business scenario, an invoice can be released before a PO. Ideally, a process is being followed where a PO is created, then it is shared with the vendor. Vendor will then dispatch the material along with the invoice, and then an invoice booking will happen in our system. So this is a very clear case. We can identify those exceptions. We can deep dive into it to understand the process gaps. Third is analysis of a three-way mismatch report. There are a lot of indicators in our system. I'll give you one example. In a PO, GR, and IV process, the quantity and the price will match. However, if there are some additional costs which are coming for detention or some anything, for inward freight, which was not considered into PO. Now these expenses get directly booked into your three-way match. While booking the invoice, a separate tab has been provided where they will book those invoice, those amounts. And those amounts without any approval are a big area of concern. And therefore, this three-way mismatch discrepancy report will help you to identify those cases where there have been unauthorized booking of this, of amounts, and that can be reviewed further. It can be matched with the actual approval, which is obviously maintained manually by the process owner. So this can be matched with the approval to identify if there are any gaps, and that can be easily reported in your observation. Analysis of long age accounts payable items. So we have seen in past that this is it's a very fraud prone area, wherein if the buyer or the accounts payable team, say in this case, the accounts payable team is in hand in gloves with the vendor, they will communicate with them that okay, there is your old age payment which is pending. You submit the invoice, maybe you can resubmit the invoice and we'll make you the payment. Last is the vendor advance not adjusted before making the vendor payment. So this is a system control. Ideally, it should be operating in majority of the companies where the system will not allow you to process the invoice unless you adjust that advance. However, wherever through analytics, we can identify cases where these advances are not being adjusted, and those cases can be taken up for review. The last is payment processing, wherever multiple payments are being made to one-time vendor. in an ideal scenario, one-time vendor is being used for vendors who don't want to get registered on our records, and therefore, and there is no visibility on the continuation of that work with the vendor, and therefore, if it's a one-time vendor, we make the payment. However, as an audit point, we have observed this in past that many payments are being processed, maybe continuous payments are being made through one-time vendor, and hence reviewing this one-time vendor analysis to identify if multiple payments are being made to a vendor, this will create an opportunity or an improvement opportunity for the business team to take up those vendors for empanelling into our vendor master, basically. So this will help you as a process improvement. Analysis of early and delay payments, analysis of supplier debits and credit notes, wherein we understand what are the reason for passing those debit note, credit notes. If there are any red flags which we identify, we can clearly deep dive and understand, and we can identify those observations. Aging of vendor balances and advances. Next is key analytics that we perform in order to cash. In change, so we have observed that in sales order, there is a continuous change in credit limits which is being done to release the sales order. Ideally, if there is a credit limit of 5 lakh and there is a sales order which is already open for 6 lakhs or 4 lakhs, what the sales guy will do is he will change the credit limit of that customer and release the sales order. These are some key risks which we have observed in the past. Excessive adjustments, fake customer accounts, same approver and creator, partial shipments and duplicate invoices, damaged good returns, unauthorized adjustments, sales order above credit limit, which I've discussed, goods shipped to incorrect addresses, segregation of duty analysis, which is a key in all the processes. Either it may be order to cash, procure to pay, wherein we identify that the person, so basically conflicting roles are being managed by the same person. He's creating the PO, he's creating the GRM, he's creating a sales order, he's creating a delivery order. So these are some segregation of duty review which we have to perform, identify the exceptions, understand the business scenario, finalize the observation and share it with the management. Some policy compliance related analytics which we can follow is incorrect rates. So comparing the price list and the invoices, basically through analytics, if the invoices are being appropriately raised on the approved prices, multiple customers which are being available in the system through PAN, GST, bank, duplicate sales orders. This is to inflate our sales. Okay, this will at the end, again, from the process point of view, it will help the sales guys to earn their sales incentives. So these duplicate sales orders, which gets created on the month end and gets reversed on first week of the month, next month. With through analytics, we can identify such duplicate sales order. Customers contract validations through text mining. A very important piece is the free samples which are being issued. So we have observed in past also that there is a process which always gets followed while issuing a sample. However, giving a holistically view of the samples which were issued over the period of 2 years, 3 years, 1 year, if you analyze the trend, you'll understand that if any policy deviation or a process deviation is happening in your samples issued, it will get highlighted in those analytics. And you can deep dive to understand if there's something wrong which is going on for issuing the samples. Price and discount variation analysis, customer payment, customer refunds, credit note analysis, accounts receivable, and some top customer review, value-wise and quantify, to understand the trend and identify some anomalies. The last would be the financial statements, unusual credit period which is being given. So within our SAP controls or automated controls, you will see that the credit periods are configured appropriately. However, there is a continuous change which is happening to those credit periods. And that can be reviewed through a trend analytics, identifying any unusual credit period which was provided to that customer over the period of time. Any outlier anomalies can be easily identified, concluded, shared with the management or the business process owners to understand what was the business logic. Receivables beyond the credit limit, again a red flag, that should not happen. Credit notes issued with unusual amount or without goods receipts. Sales orders where advance payment is not received for cash customers. Excess unauthorized sales order discounts. So these are the brief analytics which we can perform in the order to cash process. These are some global analytical tools which have been used for analytics, developing the data modeling. In any typical life cycle of an analytics, what happens is we have a data warehouse or a data lake which will provide you a real-time data. Then there will be a data engine where the rule sets will be defined, which will fetch the data from the data warehouse or the data lake. It will keep, it will run its rule sets, it will identify exceptions, and it will be presented to the management. So these are some global analytical tools: ACL, SAS, Spark, Python, Tableau, Alteryx, Idea, Brain, RapidMiner. Yeah, that's it. That's it, Gabby. Thank you. Gyati, are you there?
Yes, sir. So let me check if we have received any questions.
Sure.
Sir, we have a question from Dhruv Prakash Shetty. He is asking, with the adaptation of AI, the duplicacy will not occur. Am I right with respect to the data logs?
Can you repeat, please?
He's asking, he's confirming with the adaptation of AI, the duplicacy will not occur. Whether duplicacy will occur or not.
Yeah. So it depends on the system control. Okay. So in a normal business scenario, a same vendor cannot have more than one invoice as a duplicate. However, two different vendors can have same bill book, and therefore a system control has been configured, okay, wherein a same invoice, if we try to book twice in the same vendor code, it will not allow you to book. Now, this is on the configuration part. However, through analytics, we'll have to identify if there are users who are trying to circumvent this control through multiple means and ways. I'll give you one example. So it has been observed in past also that a buyer or the accounts guy, whenever he's processing an invoice, if it's a duplicate, he'll put hash, dash, comma as a special character, and it will allow you to process within the same vendor code also. And therefore, through analytics, what we identify is we run a fuzzy logic wherein all the special characters are removed and only an alphanumeric number is created, which is compared to identify is there any potential duplicate payment. And we have been successful in identifying duplicates. This is a clear red flag. We have to give guidance to the process owners, the accounts payable team, that these issues should not come in. Again, this is continuous review which is expected from them.
Thank you, sir. And then we have next query. One of the members, Shreya Jain, is asking to explain text mining.
Okay. So text mining is something, basically what we have to do is we have to identify some keywords. Let's say in your invoice processing, something is happening like refund or debits, some kind of goods return. You want to answer? Okay. So basically the narrations or the text column of the invoices should be some keywords. We run keywords analysis in our narration column to identify some red flags. We have a listing of keywords through which we identify some anomalies or red flags, which can be deep dive further to identify if that invoice is genuine or it's a fake invoice or a duplicate invoice, and accordingly we take it ahead. So that's a brief description of what we do in the text analytics.
Well explained, sir. Then we have next question from our member Sayyed. He's asking, sir, how to learn these data analytics, any certification course if you can suggest.
Yeah, so there is a difference because we as an auditor have functional knowledge about audit, but we lack technical capabilities. And that is where either we can take help from data scientists or our IT team, or we can self-develop that capability for doing data analytics, writing codes. And therefore, if you want to do analytical course, the data scientists or data engineers, the courses available for them can be referred for understanding and learning this kind of tools.
Just to add on, while the course are required, maybe if you want to get specialization into data analytics, right? But if you are an internal auditor or you want to be in audit, but have some capability, a suggestion would be to focus on some basic script writing or basic query writings, like doing an SQL, which you can learn on your own as well. And then it becomes like more of a, like the more Excel sheet you use, the more expert you become. And same applies even for data analytics, right? The currently those tools which are available like Power BI or Alteryx are very simple to use, or even for that matter, IDEA or ACL, are very simple to use and has a lot of advanced capabilities as well.
Right, sir. Then we have next question from our member Shiva Kumar, who is asking if you could please suggest some tool for unstructured data.
So I can refer one example for unstructured data is where we have a lot of employee reimbursement claims. So there are tools available in your market which are OCR based, which will help you to scan through all the documents which you have it in PDF version, which is kind of an unstructured data, and it will help you to convert it into your structured data, which can then be used as for analysis. So there are tools available in your market.
Right, sir. Then we have next query from our member Himanshu, is asking if is there any source recommendation to have a deep dive into data analytics relevant to the internal audit.
Source data there.
Source, sorry, what exactly is the ask?
Can you repeat, Gyati?
Data analytics relevant to the internal audit and any source recommendation
So
to
I
have
think,
a deep dive.
if I will just answer that, the source is, it's a kind of a repository which you have to build over a period of time based on your knowledge of the client, and if, Himanshu can recollect to what I explained when I was giving an overview on the automated controls. If you have understood the process, if you know the controls, the way it is designed, the possibility where it can go wrong, you can build on your resources. And while maybe on the net there will be a lot of analytics scenarios will be available, but there's no specific source to say that okay, it's a, like maybe say institute guidelines or something. I think there is no formal source as such.
Right.
But it's your experience you can build over that period of time based on your client environment, your control understanding, and the audit objectives.
Right, sir. Sir, I can see no other queries right now. I would request all the members, if you have any queries, kindly post them in question and answer box so that they can be taken up by our learned speakers.
Any further queries, they can review, share our contact details. I think they can connect with us anytime.
Sure, sir. So, sir, I don't think so. We are going to receive any more queries.
Yeah.
So thank you, Rikshit sir, for providing such a comprehensive insights about data and key analytics in P2P, explaining about sourcing, negotiations, and vendor selection vendor master management, purchase order management, goods and services receipt, invoice and payment processing, etc. And then you have covered the key analytics in O2C, explaining fraud indicators, process inefficiency, policy compliances, trend indicators, financial misstatements, etc. Thank you, Rikshit sir and Dipen sir, for your valuable time and answering the questions of the participants. And thanks to all the participants for joining us and being with us in today's session. Thank you so much.
Thank you. Thanks a lot.
Thank you, everyone.